Hi everyone, welcome back to my channel. I'm Yan Ling. So it has been a while since I last posted because I was traveling and taking some time for some self-discovery after working with so many people. But I recently had my first trip to China and it turned out to be very different from what I had imagined. If you need any tips and tricks for traveling to China, feel free to ask because setting up a payment system can be quite challenging for foreigners. Anyway, let's dive into today's topic. I'm going to do a quick review of Jden, which is about to launch. For those of you who are not familiar, Jden used to be known as J-Cube and is situated next to Jurong East MRT station. So before you dismiss Jurong as a ulu area, you might want to check it out for yourself first. I personally think that Jurong East is quite self-sufficient, offering everything you need, including Westgate, IMM for shopping, and there are even like clinics, hospitals, market, and most of the amenities you can think of. Moreover, Jden is a mixed development, and what's interesting about it is that the government is trying to transform Jurong East into the second CBD. So this plan will bring about 100,000 new jobs and 20,000 new homes into this area. So for potential investors, I believe that this presents a good opportunity for you to invest in. Personally, I feel that the current housing supply in the Jurong East area is somewhat insufficient as compared to other areas. Even though the demand for this area is considered high due to these factors, the large population in Jurong East and Jurong West, and the presence of 2 universities. And there's also a significant working population in this area like the Innovation District, Jurong Industrial, and Tuas Megaport. And you may also see demands from working Malaysians who want to stay near JB. So in today's video, I will first provide a quick overview of the unit mix, floor plan, and the price analysis of the area. Finally, I will share my personal perspective on whether Jden is a good investment. If you are eager to know my verdict, you can just skip ahead to the last part of this video. Let's just quickly go over the project details. I won't be diving too deep into the details because you can find all this information in the brochure. I believe that the primary concern over here are the price and whether Jden offers value for your investment. As you can see over here, Jden comprises of 368 units with a range of 1 to 4 bedroom options. Parking spaces make up of about 80% of the total, which I think is sufficient due to the strategic location and unit mix. This location is likely to attract a considerable number of tenants, so parking availability should meet residents' needs. For buyers who are very concerned about the developers, Jden is developed by CapitaLand and Jden location is quite advantageous. It is conveniently situated near 3 different MRT lines, enhancing connectivity in the area. So Jden location is highlighted on the map. Adjacent to Jden, you can expect future developments in this plot of land, and the plot here is currently planned for a mix of residential units and commercial spaces in the near future. So residents will be able to access this building through the J-Walk, which is a bridge connecting to other structures. Now let's take a look at the unit mix. As mentioned earlier, around half of the development consists of 1 bedroom and 2 bedroom units. These are likely aimed at investors looking for rental opportunities due to the excellent location. The 3 bedroom and 4 bedroom units, on the other hand, are more likely to attract individuals or families looking for their own residence. Now, looking at the floor plan, the sizes are actually quite spacious for 1 bedroom and 2 bedroom units. A typical 1 bedroom unit nowadays is about 450 square feet plus minus. For example, the reserve residences is 441 square feet, and a typical 2 bedroom unit is about 600 plus square feet. For Jden, the smallest 1 bedder is 527 square feet, and the smallest 2 bedroom is 710 square feet. Which means that the 1 bedder and 2 bedder at Jden are more spacious than most of the new units in the recent launches. The advantages of these unit sizes, along with the dumbbell layout, are that they provide more space for your living and bedrooms. Some developments have a walkway to your bedroom, which can be seen as unwanted space. However, for Jden, with this dumbbell layout, it's quite efficient and comfortable to live in. Since it's larger than most of the recent launches, it means that the price will likely be higher, so be mentally prepared for that. Similar to Grand Diamond, which was launched a few months back, they do not offer my favorite 2-bed, 2-bath unit. If you're looking for one, you may want to opt for a 2-bed, 2-bath plus study unit. If budget is a concern, you want to settle down for a 2-bed 1-bath unit, or if you're willing to explore other projects, which I think there are better projects out there which offer a more value buy and have more potential if you are specifically looking for 2-bedder. The Maze is one of the hidden gems that I think has great potential because the quantum is low as compared to some of the surrounding new projects, and the layout is one of the best as well. Moving on, the 3-bedroom and 4-bedroom floor plans are pretty standard. However, one thing that I don't really like about it is that the balconies are a bit too big, which I personally feel like it's a waste of space. Next, I know that the question on everyone's mind is that how much will Jden be launching? As I was recording this video, this news came out that Jden launch price will be starting from 2100 PSF. However, as this 2100 is starting from, realistically speaking, I think most people would probably get it at around 2200 PSF or 2300 PSF. All in all, the price that you're getting in depends on your balloting number and the unit that you chose. So this table gives you a quick overview of the estimated price and quantum based on each PSF. This is just for your reference. I understand that some people may look at these prices and think that the PSF is high for a condo in Jurong or OCR area. However, these are the market prices nowadays, which is why it's important to take action earlier when you spot a good project with potential. Imagine if you had taken action earlier, about maybe a year ago, you could have purchased something near Outram or Chinatown area with these prices. A year ago, these are the prices for the landmark. However, looking at the Jden prices now, it actually makes the landmark appear more affordable. However, as most of the unit at the landmark has been sold, you won't find these prices for a new launch in the area anymore. So congrats to those who saw the opportunity and took action earlier. Now, back to Jden. Conservatively, if I were to buy it at around $2,300 PSF plus minus, is it reasonable? Let's compare this price with the recent launch that I reviewed, the Lake Garden Residences. We had an average launch price of 2120 PSF. The Lake Garden Residences is not conveniently located as it is not near MRT or any immediate amenities. So if you compare Lake Garden Residences to Jden, Jden is within walking distance of 4 MRT lines and it is a mixed development. And developer knows that Singaporeans value convenience, which is why they will charge a premium for a project like Jden due to its strategic location, because they know that someone will be willing to pay for it. Just like when you're traveling, hotels in a more strategic location are generally more expensive. And a quick note over here, just my personal opinion, sometimes our fixation of certain factors such as convenience may lead us to overlook certain projects with greater potential, even those that are away from the MRT station, because we fail to see the broader opportunity they may offer. But based on this article, it's starting from $2,100 PSF, so I think if you can really get it at $2,100 or $2,200 PSF, it will be a no-brainer for you to buy. It's because if you compare Jden prices with the newest resale condo nearby J Gateway, for J Gateway, the average transaction price is already reaching 1913 PSF on an average, with the highest sales hitting 2100 PSF, and J Gateway is already about 11 years old. Therefore, if people are willing to pay this much for a resale unit, I think that getting Jden at about $2,100 or $2,200 PSF would be relatively a safe choice. Moreover, consider there is a shortage of new condos in that area as most of the nearby condos are already at least 25 years old or even older with depreciating leases. So if you were to sell Jden in the resale market in future, I think that there won't be much competition. J Gateway, despite being the most expensive condo in the area, outperformed the other older condos in the vicinity because it's a new development. Interestingly, when J Gateway was launched, there were cooling measures in place and some people were hesitant to buy. However, kudos to those who saw the opportunity and bought in, as most owners were able to exit with a profit. For investors considering renting out their unit, the rental market in the area is quite promising. With more job opportunity being created and the ongoing transformation in that area into the second CBD, finding a tenant should not be a problem. For your reference, here are the estimated current rental prices in today's market. Additionally, J Gateway often attracts good tenant profile. In terms of the exit strategy, there are multiple opportunities. The first one is in 2028 where the new MRT line is expected to be completed. If you want to hold on to your property a little longer, you can also consider waiting until 2030 or 2032. The chart shows some of the past resale profits of mixed-use developments, providing context for your decision. So, is Jden worth buying? In my personal opinion, it is a good project surrounded by numerous transformation initiatives. The idea of living in the second CBD is exciting as well. However, if you're not a risk taker, I personally feel that a safe entry price will be around $2,300 PSF plus minus if you really highly value convenience and this is your top choice. Or else, if you really want mixed development or integrated development, you may want to consider the reserve residences as the price range is similar to Jden. Do note that there are not much good units over there even for the west sun facing unit due to strong sales performance over the last few months. Nonetheless, if you're open to non-mixed or non-integrated development, I personally think that there are safe choices like the Mist, which is next to Cashew MRT station. I have done a review on it as well. The reason that I consider the Mist as a safe choice is due to its lower quantum and it is definitely more affordable than most of the new launches around the area. In my view, I think that there's a price cap during each period of time. So for instance, consider the Continuum. So initially it had a decent sales, but as the less expensive units were sold, the selling rate kind of slowed down due to the quantum and PSF. So it may seem relatively expensive now because buyer has other options, other more affordable options. Looking at the Mist, which is currently sitting at around $1,900 and $2,100 PSF, while the recent new launches around the area have transacted at a similar prices or somewhat higher than the Mist. If buyers around the area have already paid more than the Mist selling price, I believe that it is safer to enter as there are more room for growth before reaching the price limit that buyers are ready to accept for a new launch. And the layout for the Mist is also one of the best. Therefore, for those who don't like Jden 2-bedroom, you may want to consider the Mist 2-bedder, which has better layout. And another thing to take note is that when it comes to bank loans, quantum plays a significant role as well. Just an example over here, for example, if you plan to sell your unit at the Mist in the resale market later on, your target audience will likely be broader than the rest of the new launches with a higher entry price. For instance, someone who bought a new launch at $2,300 PSF around Beauty World area may aim to sell it around $2,500 PSF, but there may be instances whereby buyers who really like that area can only afford up to $2,300 PSF due to the quantum and their loan eligibility. In this scenario, where most of the owners nearby are asking for $2,500 PSF, the Mist owners who bought it at $2,000 PSF only need to sell it about $2,300 PSF to turn a profit. In the end, the decision is yours to make. If you are really interested in Jden, do have a reserve price in mind before the booking day. In my personal opinion, if you could get it around $2,100 or $2,300 PSF, it will be a good buy. Though I personally think that Jden is a good product, but the entry price is crucial if you aim to profit when you sell in future. The preview has already started. If you are interested to learn more about project, do let me know. Thank you for watching, and if you have any questions, you can contact me at 8111 4672. See you in my next video. Bye!